Hello everyone. Welcome to MiloX News. I'm Marcus, your host. Are you ready to ride the wave of Tesla's success? What if I told you that Tesla's stock is on the verge of a significant breakthrough? In fact, Tesla recently closed above the weekly channel peak of 287 by a 1% margin, indicating the early stages of a secondary long-term buy signal. In this video, we'll break down the latest trends and projections for Tesla, providing you with the insights you need to make informed decisions about your investments. Before we start, I invite you to like this video, subscribe to our channel, and leave your comments about the video in the comment section. Let's get started. On Monday, Tesla closed above the weekly channel peak of 287 by the required 1% margin. This is considered the early stages of a secondary long-term buy signal. Almost 2 months ago, we closed above the descending channel peak of 188, which set a long-term target at 414, a reassessment of this all-time high in the following months. Closing above 287 at the end of the week by a 1% margin, that is, 290 or higher on Friday's settlement price, should yield 414 over the next 3 to 5 months, given the still heightened volatility and directional movement. Now, we have already met the requirements for having closed above 287 by a 1% margin 2 days in a row this week, Monday and Tuesday. Only Friday needs to do the same, and then that is the final shoe to drop on a big picture target of 414. On the way up, we can anticipate this old high area from last August, 313 to 314, as a 1 to 3 week target where we could top out on a weekly basis and possibly pull back to 287. So, if you haven't gone long yet, you might wait for a pullback to this channel top. But this will be a solid long-term support zone assuming we close Friday above it by a 1% margin, 290 or higher. That would present a buying opportunity if we pull back to it. But we could easily close above 314 in the next 2 or 3 weeks, and then I'd say within 2 to 3 months we should reach 414. That's the big picture. If we close at 287 or lower on Friday, then it's a no-go, and then the market is still susceptible to falling off significantly as we move into August. We wouldn't really have a sell signal into August trade unless we were to close at this point below the 5 to 6 week channel bottom of 253, but that's another story altogether. In terms of the immediacy of line studies and channel structures, we are still trading above the channel top of 286, which is the same channel top on the daily chart that we find on the weekly chart at 287, and it contained Tuesday's lows. If you look at the all-time high of 414 against the low of 101, 61.8% of the way back is 295, and you always have to make choices with technical analysis because a lot of times you have moving averages or line studies. Whatever you follow, you always have to choose which is the stronger of the two, and I'm going with structure here. In other words, yes, I recognize we can top out at 295 for a day, maybe several. I still have it as an intraday resistance level only because I think buying pressures can continue to build above 287. And if we push or open today above 295, 300 is within reach. That's all for now. Remember to like this video and subscribe to our channel. I hope you enjoyed the video. Don't forget to leave your comments and see you in the next video. Until next time.